Welcome back to Maryland Today. We all remember the housing crisis that the nation experienced in 2008. I'll never forget seeing all of the foreclosure and for sale signs popping up in my neighborhood at homes for people who just couldn't afford their payments anymore. Just this January, the Consumer Finance Protection Bureau instituted a bunch of new regulations aimed at helping us avoid getting into another situation like that. My name is Jeff St. Pierre, and joining me to talk more about these new regulations is Carmen Jones-Burke. She's a certified credit and housing counselor at Consumer Credit Counseling Service of Maryland and Delaware. Thank you so much for coming by and joining me here today, Carmen.
Thank you for having me.
This is the first time you and I have met. I want to get to know you a little bit first before we start talking about our little topic here today. Tell me a little bit about your involvement with CCCS.
Absolutely. I've been with Consumer Credit Counseling Service for many years. Actually, it's probably about 17. And I do foreclosure intervention counseling as well as reverse mortgage counseling.
Okay, so you got your hands involved in quite a few things over there? Absolutely. Well, it's a pleasure to finally meet you. I've heard your name before, so nice to have you here in the studio to talk about some different things here with CCCS.
Thank you for having me.
Well, let's get right into the meat of the subject here. Taking a look back a few months here, in January, the Consumer Finance Protection Bureau instituted a host of new housing regulations. So why were these new rules put into place?
Well, simply put, the objective is to hopefully avoid a repeat of the housing crisis that we experienced in 2008. The regulations are an outgrowth of the 2010 Dodd-Frank Wall Street Reform and Consumer Protection Act. They're designed to help protect home buyers and homeowners from many of the abuses and pitfalls that actually created that crisis.
Now, these regulations, they've got a lot of moving parts, so I think it's probably best if we take a look at them in two parts. So today, why don't we talk in terms of the home buyers, and further down the road, we'll have you back in here to talk about the homeowners side of things. So with that said, Carmen, how will these new rules help listeners who hope to buy a home this year?
Home buyers are actually now protected in four major areas. First, the home buying process is now safer and easier to understand. There's basically an increase in the level of transparency. Second, there's a limit to the fees lenders can charge and still make what's called a qualified mortgage. Third, with few exceptions, loan originators now will be required to be licensed, registered at a state or a federal level. They also can't be paid anymore to steer buyers into higher cost loan products, which was very common in the past. And finally, home buyers now have the right to receive a copy of appraisals and valuations at least 3 business days prior to closing. That's going to give them an opportunity to review the information more thoroughly.
Now, this all sounds great, but let's talk about the reality here. During the recent housing collapse, it was very clear that many lenders made loans without making sure borrowers had enough money to repay what they owed. I mean, that was really one of the big primary reasons so many people ended up in foreclosure. How are these new regulations going to keep this from happening again?
Well, a principal part of the new regulations is what's called the ability to repay, or ATR rule. This rule requires the loan originators to make a reasonable good faith effort to determine a borrower's ability to repay before approving a mortgage. While the rule doesn't require the lenders to follow specific underwriting standards, it does list specific factors that have to be considered.
So what are some of the factors that lenders have to consider before they approve a buyer's mortgage?
According to the Consumer Financial Protection Bureau, lenders must request, consider, and document a borrower's income, assets, employment, credit history, and monthly expenses. Assessments can no longer be based on low introductory or so-called teaser rates. They have to make at least a reasonable effort to determine if the borrower is still going to be able to afford the mortgage when the payment actually does increase.
If I'm reading all of this right, I understand that one way a lender can follow the ability to repay rule is by making a qualified mortgage. What exactly is a qualified mortgage?
Well, this is the mortgage the borrower should be able to afford. It limits how much of your income can be used for the mortgage payment, and it has more stable features. A qualified mortgage limits allowable points and fees and risky features such as interest-only periods, negative amortization, and to a good extent, balloon payments. Loan terms can't exceed 30 years.
Since the housing collapse, things have obviously changed. So in this new lending environment, how easy is it going to be for home
home buyers to find a qualified mortgage?
Actually, they shouldn't have any problems finding a qualified mortgage. Most lenders, or pretty much all lenders, are able to offer them. For the next 7 years, all loans that can be purchased, guaranteed, or insured by the VA or the USDA, they're going to be considered qualified mortgages automatically. Additionally, any loan that is eligible for purchase by Fannie Mae or Freddie Mac, that's automatically a qualified mortgage as long as it meets certain product requirements. And the FHA loans, those are also going to fall into that category.
Okay, Carmen, under these new rules, can consumers still opt for mortgages with higher points and fees?
Well, yes, if they really want to, but they're probably going to be less inclined to do so. If they do decide to take out a high-cost mortgage, they'll be required to obtain pre-purchase counseling. At CCCS, we think most home buyers can benefit from this type of education. After all, purchasing a home is probably the biggest investment most people are going to make.
We're talking with Carmen Jones-Burke. She's a certified credit and housing counselor at Consumer Credit Counseling Services of Maryland and Delaware. And we're discussing different regulations that have come into place here that can affect home buyers. How does the pre-purchase counseling that CCCS provides help local consumers navigate the home buying process?
In a word, the key here is education, because we at Consumer Credit Counseling Service have been providing education to consumers since 1966 in an effort to help them make better financial decisions. Our housing program itself is based on guidelines set by the National Industry Standards for home ownership and education and counseling. We adhere to HUD guidelines, and we use our own knowledge of best practices to provide that education. All of our counselors and educators are actually fully trained and certified.
So when clients come to you for home buyers education, what do they learn?
Well, if they attend our workshops or complete our online certificate course, they come away knowing how much home they can actually afford to own and what barriers may impact their ability to purchase. They also learn how to budget and save for that major purchase. They'll learn how to obtain, review, and understand their credit reports and credit scores. Ultimately, they'll be able to identify the loan product that's going to be right for them. All quite relevant, I'd say, based on the new regulations.
All right, let's talk a little bit more about these new regulations. As part of this effort, I understand the CFPB has changed the disclosures home buyers receive. What can you tell me about that?
In response to the Dodd-Frank Act, the Consumer Financial Protection Bureau has revised two of the major disclosures, specifically the truth in lending statements, which consumers receive shortly after they apply for the mortgage, and then also the HUD-1 settlement statement, which they receive shortly before they close on the mortgage. The changes to these two disclosures are based on extensive communication with consumers, lenders, mortgage brokers, as well as settlement agents. The end result should be disclosures that are easier to understand and use. That means home buyers are likely to receive a clearer and more comprehensive picture of the costs that they're going to be dealing with as associated with the purchase.
So how can listeners that are tuning in today make the most of the new Consumer Finance Protection Bureau regulations?
While the new regulations should make the market safer and easier to understand, you still have to remember only you can decide how much home you can truly afford. So use the information you receive to make a more informed decision. You're also going to want to make sure you're receiving reliable help. So any company that's paid to help you find a mortgage is now expected to train its agents. It's also expected that these agents, brokers, and loan originators are going to have background checks. With very limited exceptions, they're actually expected to be licensed or registered at state or federal levels. To make sure your loan originator is reputable, ask about their credentials. No harm in asking. And finally, pay attention to the fees you're being charged. Though there are limits with qualified mortgages, you still have to decide if these are reasonable fees to you. So don't forget to actually read your HUD-1 because you want to make sure you're paying only for what you agreed to pay for. Always ask questions if you don't understand.
Well, a ton of information here, Carmen, which is exactly what I expected from having you come in here. But before we do wrap things up, can you please tell people listening how to find out more about CCCS's housing counseling and educational programs?
Consumer Credit Counseling Service offers both group pre-purchase certificate workshops and an online pre-purchase certificate course. In both cases, clients receive in-depth education and personalized counseling. Listeners can access the online course on our website at www.cccs-inc.org or call us at 1-866-731-8486 to schedule a counseling appointment. After all, a well-informed consumer will be much better prepared to make a good home buying decision.
Well, that's definitely for sure. Carmen, can you give me the information one more time, just the website and the phone number in case somebody didn't have a pen out right away?
Absolutely. That's www.cccs-inc.org or call us at 1-866-731-8486.
Carmen Jones-Burke, certified credit and housing counselor for the Consumer Credit Counseling Service of Maryland and Delaware. Carmen, how'd your first interview go?
It was interesting. Thank you for having me. Quite exciting.
Look forward to having you back here again sometime soon. Carmen, thank you so much for coming by.
Thanks again.
And thank you for joining us this and every week for Maryland.